Hello everyone, and welcome back. Today, let's take a deep dive into the Indian stock market sectors. Which ones are leading, where the growth is coming from, and what the outlook looks like over the next 5 years. Instead of just numbers, I'll walk you through sector by sector in a simple and practical way so you can understand where the real opportunities lie. Information technology, IT. Let's begin with IT, India's global powerhouse sector. We're talking about giants like TCS, Infosys, and HCLTech. Over the past year, IT has been growing at around 10 to 15%, and in the next 3 years, it could deliver up to 40–50% returns. Looking further ahead, the 5-year growth outlook is 15 to 20% annually. The big drivers? Artificial intelligence, cloud computing, and digital transformation. With global clients increasingly depending on Indian IT, this sector is expected to remain a long-term wealth creator. Financial services. Moving on to financial services, the backbone of the economy. Here, leaders like HDFC Bank, ICICI Bank, and Bajaj Finance continue to dominate. The sector is expected to grow 8 to 12% in the next year, about 25 to 35% over 3 years, and maintain a steady 12 to 15% annual growth in the long run. What's fueling this? Rising incomes, rapid urbanization, and expanding credit penetration. Financial services are not flashy like IT, but they're a steady compounder. Energy next, the energy sector. We have giants like Reliance Industries, ONGC, and NTPC. Short-term growth is around 5 to 10%, with medium-term growth of 20 to 30% and a longer-term outlook of 10 to 12% annually. This sector is undergoing a transition from fossil fuels to cleaner energy sources, which means while traditional players will continue to grow, the future will be shaped by renewables. Healthcare and pharma. Now let's talk healthcare and pharma, a sector that gained attention during the pandemic but continues to remain strong. Companies like Sun Pharma, Dr. Reddy's, and Apollo Hospitals are leading here. Expect 12–15% growth in the next year, 30–40% in 3 years, and a solid 12–18% SAG over 5 years. India's strength in generics, medical tourism, and increasing healthcare demand makes this a sector you can't ignore. FMCG, consumer goods. Next is FMCG, or fast-moving consumer goods. Here, we're looking at leaders like Hindustan Unilever, ITC, and Britannia. FMCG might not be the fastest-growing sector, but it's very stable. Expect 6 to 10% growth in the short term, 20–25% over 3 years, and 8 to 12% annual growth long term. With India's growing consumption story, this sector is like the steady heartbeat of the stock market. Industrials and infrastructure. Now, industrials and infrastructure. Companies like Larsen and Toubro, UltraTech Cement, and Siemens are key here. Growth will be moderate at 5 to 8% in the near term, 15 to 20% in 3 years, and 10 to 15% annually over 5 years. The big boost comes from the government's infrastructure push, roads, smart cities, and manufacturing expansion. For long-term investors, this is a solid play. Renewable energy. One of the hottest sectors right now is renewable energy. Names like Tata Power, Adani Green, and NTPC are dominating the headlines. The short-term growth here is massive, 20–25% in just 1 year, 50–60% over 3 years, and a potential 18 to 25% CAGR over 5 years. With government policy backing and global demand for clean energy, renewables are shaping up as the fastest-growing sector of the next decade. Consumer discretionary. Now let's look at consumer discretionary, sectors like automobiles, jewelry, and lifestyle. Leaders include Maruti Suzuki, Titan, and Trent. Growth is moderate, 5 to 8% near term, 15–18% over 3 years, and 10–12% CAGR long term. The drivers here are rising incomes, shifting lifestyles, and aspirational spending. Real estate and construction. Next, we have real estate and construction. Companies like DLF, Godrej Properties, and Oberoi Realty are leading this space. Expect 6 to 7% in 1 year, 15 to 20% over 3 years, and 10 to 12% annually over the next 5 years. Real estate is cyclical. Sometimes it booms, sometimes it slows down. But with urban housing demand and commercial expansion, growth is coming back. Materials and metals. Now, onto materials and metals. Here we have companies like Tata Steel, UltraTech Cement, and Grasim. Growth is expected at 5–8% short-term, 15–20% over 3 years, and 8–12% CAGR long-term. This sector is heavily dependent on infrastructure demand and global commodity cycles, so investors should watch out for volatility. Telecom. Finally, let's talk about telecom. The leaders here are Bharti Airtel and Reliance Jio. Growth is around 5–7% short-term, 15–18% medium-term, and 8–10% annually over 5 years. The big story here is 5G rollout and India's rising data consumption. As more people move online, this sector will continue to expand steadily. Wrapping up, the big picture. So, which are the fastest-growing sectors? Clearly, renewable energy, information technology, and healthcare and pharma stand out with the highest growth outlook. But at the same time, financial services and FMCG provide stability, while industrials and infrastructure add long-term strength. Market analysts expect the Indian economy to grow at around 7–8% annually over the next 5 years, and these sectors combined will be the growth engines. As always, remember that sectors like real estate and metals are cyclical, so diversification is key. So, whether you're a short-term trader or a long-term investor, keep your eyes on the fast-growing sectors like renewables and IT, but balance your portfolio with steady players in finance and FMCG. That's it for today's breakdown of the Indian stock market sectors. If you found this helpful, don't forget to like, share, and subscribe for more market insights.